Thank you so much for joining us today. I'm Dana Anders, a principal in our senior living practice, and we are kicking off what we hope to be a regular series of short video segments covering updates and insights that are important to you. We've received a ton of questions related to the accounting treatment of the various CARES Act relief funds, so we thought it would be a good way to kick things off and go over a quick overview of what we know at this point. As we all well know, things are changing every day and information is being thrown at us faster than we can catch it. We have a dedicated team here at CLA that's working 24/7 to sift through all the information and make sense so we can get it back out to you. We feel like it's extremely important to get in front of these situations now and adopt the appropriate accounting guidance and to develop best practices so we can all avoid potential pitfalls in the future. One of the main things we're telling our clients is that the tracking of the expenditures related to these programs is going to be key, and you need to get started with a good system from the very beginning. While we don't have definitive guidance on exactly how detailed the records you'll need to provide are yet, we feel like the more detailed, the better. A few best practice ideas on tracking proceeds and expenditures might be to create a separate bank account and use it only for receipts and payments related to these relief measures. While that can be an administrative headache, another suggestion might be to set up specific accounts to which only qualified expenses are charged, or set up a separate COVID-19 department in your general ledger. One suggestion with that would be to utilize a department for each program from which you receive funds to ensure that the same expenses are not reimbursed under different programs and grants, as this will be looked at very detailed in the future. So far, as some of the accounting guidance goes, let's get started with Medicare advance payments. If you applied for and received Medicare advance payments, that revenue is not yet earned, so you'll need to reflect this as a contract liability or deferred revenue. As you bill Medicare, you'll receive remittance advices that either have a reduced amount or a zero payment amount. When you receive these advices, the related patient AR and that contract liability amount should be reduced. Moving on to the deferral of Social Security tax. If you have elected to defer Social Security taxes, you would record your expense and accrued Social Security tax as you normally would. The amount of the tax you defer would then be recorded as a current liability. Upon payment of the initial 50% at 12/31/21, reduce the accrued Social Security tax and then also reduce cash. You would do the same thing again with the remaining 50% at 12/31/22. Since you already recognized this expense when it was incurred, no expense is recognized at the time of these payments. One thing to keep in mind as you consider all of your different options is that with these two programs, the funds need to be repaid. You need to make sure to be looking ahead at your ability to repay these funds and ensure that you're not just kicking the can down the road and creating future problems. If you received a distribution from the Public Health and Social Services Emergency Fund, we all know that there are restrictions on the use of these funds. Because of these restrictions, if you're a nonprofit, you should record these proceeds as net assets with donor restrictions until the expenditures have been made that satisfy the restricted purpose. As funds are expended, they can be released from restrictions and moved into operations. These funds are intended to reimburse you for lost revenues and increased expenses due directly to COVID-19. You can estimate lost revenue by comparing your year-over-year revenue for March and April, or by comparing your budgeted revenue for those months to actual revenue. Specific accounting guidance is not currently available on accounting for grants received by for-profit entities. However, the for-profit would have the same consideration as nonprofits. Since these funds are being treated as net assets with donor restrictions and are then being released into operations, these amounts can be included in income available for debt service in the period they are released. Many of you were successful in obtaining PPP funds, and we've received a lot of questions related to the accounting treatment of these funds. PPP funds are being treated as forgivable loans and as such are subject to guidance under ASC 958-605 because these funds include barriers to their use. When you receive your PPP funds, you should book a liability in the amount you receive. Because of this barrier, the loan will remain outstanding until the bank approves your application for loan forgiveness. At that time, the liability would be reduced by the amount forgiven, and that amount should be recognized as a contribution above the performance indicator. For-profits should also record funds as a separate debt extinguishment line item in your financial statements. In the absence of differing guidance, presenting the forgiveness as a grant consistent with nonprofits may be appropriate. For those of you with outstanding debt, because the forgiven amount is being treated as a contribution, it will most likely be allowed to be included in your income available for debt service for purposes of your debt covenant calculations. Please review your specific bond documents and read your covenant calculation definitions very carefully. It's also helpful to consult with your banker and bond counsel to make sure that everybody's on the same page as to the treatment of these amounts. Secretary Munchin also announced that any organization that received at least $2 million will be required to undergo an audit regarding the receipt and expenditure of these funds. Again, this is why it's so important to develop a comprehensive system for tracking these funds from the very beginning. So that's a very high-level overview of the accounting guidance for the 4 main relief fund efforts. If there's a key takeaway from today, I think it would be plan ahead. Be looking now at how these funds will affect your financial reporting and more specifically your debt covenants. If you foresee an issue, let's get out in front of it, and to the extent that we're able, let's mitigate those issues. For the senior living providers that are watching today, a tremendous thank you to you for putting every ounce of energy, compassion, and effort you have into caring for our older population and for making such a difference in our community. We here at CLA are extremely grateful and proud to have the opportunity to work with you. That's all for today. Check back for additional updates and insights. Thanks for watching.